Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the ORB Strategy Workshop. Today, I'm going to show you how to trade the 2-bar ORB strategy We're going to look at it on U.S. equities, and I'm also going to give you a premium setup type of scenario for the Forex. We're going to talk about that 4-hour 2-bar orb that essentially is a swing trading approach, but it can get you into the Forex right after the market opens on a Sunday and potentially ride those trades throughout the trading week. Now, I'm going to illustrate a loser today. I'm going to show you guys the winners and the losers. I don't like to just focus on winners because we focus on the losers here. You learn more from losing. Number one, it shows you what you're made of in the markets and how much you really want this lifestyle, but it also gives you some insight into maybe what you're doing wrong, where your strategy's weakest, or maybe you've got a rock solid strategy, you've just got your entries inverted. So something like that can be a tremendous amount of help. And so today we're going to look at a loser this week on the Euro USD that developed on that 2-bar orb Forex type of a setup. So I want to welcome everybody to the live workshop here, the Switch Markets Live workshop. We've got a lot of familiar faces over in the How to Trade community. Let's see what we got. Tuku, good to see you, Tuku. Andrea Garwal, always a pleasure. Andrea, Lita, thanks for joining, Lita. Bobby Bob, good to see you, Bobby. Welcome. Over in YouTube land, we've got T Marina, good to see you, Tina, and Tina Jing. All right, hello, Shane. Lewis, good to see you, Lewis. Welcome, Lewis, 3484. I love the numbers behind the names. I usually use 10 or 13 or something like that, 22, 36. Oh, those are all my old sports numbers. But definitely, I want to welcome you guys to the live streams. And anybody that has any questions at all on this strategy, now is the time to ask. What I'll do is I'll cover a section of what we want to get accomplished here, and then I'll stop and take any questions that you would like. Remember, a live Q&A is absolutely fantastic. I love doing them. And there's only a couple rules on my streams. Number one is if I don't know, I'm not going to fake it. I'm not going to BS you. We're going to try to figure out where you can find an answer to your question. But as far as the orb goes, I got a pretty good idea how to trade the orb today. Interesting type of a day. US 30 printing 49.5. US 100 on the rally 25,699. US 500 back up to 69.67. So a lot going on here. We're also going to talk a bit about the US 2000, the Russell 2000. That is also another orb candidate. We're going to go over two kinds of trades today. We're going to talk about the orb strategy, the 2-bar orb on different time frames. We're going to look at that U.S. session at our equities. So we're looking at the U.S. 30, the U.S. 100, the U.S. 500, the U.S. 2000. Then I'm going to briefly touch on the Forex strategy, the opening 2-bar strategy using a 4-hour chart. And then we're going to talk a little bit about how to trade a local currency according to that own domestic open. So you definitely want to get get your pen and paper out if you have any questions at all. Like I said, now's the time to ask. So let's go ahead and just get this thing rocking and rolling. I want to start off with a trade update. This is a trade that I've been watching. I've been monitoring it closely for about the last, 4 hours or so. Are we out of the woods with this trade? This is interesting to me. I'm incredibly confident in where our stop loss has been placed. I think we have a legitimate chance to win this trade, even though it still is behind a little bit. But I'm really happy with where that stop loss was. I'm going to talk about how to execute it and maybe some options that you have right now. So what you've got here is a Euro USD CPI in line with expectations. Euro USD is back in play. This is a 62% retracement level on that weekly time frame that we were really looking to get live on. Now, we hit the 38% trade right off the bat this year. Was a really nice scalp. This is a pretty good scalp as well. I'm going to go ahead and break it down for you. Ralph H., good to see you, Ralph. Welcome. This is what the trade looks like in real time. Now, you can see sort of where our dotted line is sort of a rough, that would be our next level. It's somewhere right up there, right around 39, which is about a 25 pip hit. And then right down here is where I would probably have my stop loss located, right down at 115.89. Now, the key levels, the trade ideas that we put out, typically I approach them on a one-to-one basis. You don't have to do that. You can play them tighter. You can play them looser. All that's up to you. Remember, I am not a financial advisor. If I was, I got a couple of hot tips that I'm very confident in this year, but I'm not a financial advisor. So when I show you a trade idea, it's something that I'm looking at or that I've executed. And that's the bottom line for this Euro USD. Fantastic trade. I mean, believe me, about when I got up this morning and I looked at the price action, I was scratching my head because we had a big plunge right there at about 6:30 a.m. my time, 8:30 a.m. Eastern. Plunged right down, continued to trickle down there, and that low was right down around what? 115.93. Now, tentatively, my stop was going to be right at 115.89. I was going to watch what price action did at 89. If we continue with the bearish pressure, I was pulling the plug and I was out. Well, 14 is our entry. And we're back in business. We had a really nice sort of a lot of folks would call this, it's not quite a fishhook formation, but if you're familiar with parabolas, things like that, you've got something like this that is pretty nice. I mean, it really is pretty nice. That's a nice little, it's not a parabolic curve, but it is sort of a parabola, and it shows you exactly what's happened in this market. We went down, we based out, caught some bids at 90. We're back above 116 and back to break even. So for me, the fate of this trade is going to rely on a couple of things. Number one, you want the U.S. dollar to weaken. I feel like we're in a pretty good position to see that through the rest of the day. But what we have here is our key level, and that's going to be our weekly 62% Fibonacci level, which is right around 116.12-ish. You want to see a daily close above that. If you get a daily close above 116.12, then we have a tremendous opportunity to make a run and go get our 25 pips. So I like this trade. This trade's been a bit trying. It's tried my patience. I'm not going to lie to you, but we're back in business there. One last thing I want to check, and then we'll get on with the tutorial here. Gold and silver. Gold and silver's rocking. Silver is going on an otherworldly, a generational run. I mean, this is generational performance. There was folks growing up, when I was growing up in small town Montana, a lot of the old timers, they were gold and silver bugs. They loved it. I knew an older gentleman that was one of our neighbors. We built the house for, really just a fine man, and he put his retirement. A lot of folks were buying stocks and equities and all the things that we buy and sell. He put it in guns and he put it in silver, and he showed me these giant silver bars. He had piles of these silver bars, and the price never went up while he was alive. I watched this rally, and I often think about him and what that silver's worth today. He had bars of silver, and I don't mean just like one or two. We're talking about hundreds and hundreds of bars. Just an amazing stronghold. So wherever he is, probably in the next life, I'm sure he's smiling, saying, "See, I told you, silver was a comer." You were right, sir. You were just about 20 years too early. Maybe 25. But this is a generational run in silver. Every day I sit here and watch in awe of the bullish pressure that's hitting this market. And there's a lot of people out there saying that I told you so, I told you so. We made this call back in October. Gold-silver ratio is right around 50. At the time, it was up around 100. I sort of felt like silver was going to get a nice breakout. The idea wasn't completely my own, but just being able to read the markets, understanding that, man, silver's undervalued compared to gold. And that's what the institutions did, and they are hammering it day in, day out, bidders. And I have to tell you that if you were long silver at the right time, you made an absolute fortune, and I'm cheering for you. If you bought in down at those $25, $30 levels, make sure that you get what you want out of this trade. There are no rules on how high silver can go. We're going to have a serious discussion about it tomorrow, more than likely, right up around 100. This market's off 1.3%, but it's established today up above $90 an ounce. And I believe at the time our neighbor, his name was Mr. Jeffries, called him Mr. Jeffries, and he had stockpiled all this silver, and I believe he was buying it like for $3 an ounce or something. $4 an ounce, $8. It was just so ridiculously cheap, and he believed in it. Sort of prima facie evidence that you can be right, but if your timing's wrong, then you're not going to be in a position to win. So what we try to do on these streams is show you the timing, show you how to time the markets, show you how to build trades and attack from a position of strength, position of confidence, not necessarily waiting for your ship to come in, but actually going out and finding a ship and taking control of it. And that's really the difference between trading and investing. He invested, and he didn't really get to live to see the fruits of his labor and the fruits of his ideas. But as traders, you're going to see the fruits. We're going to see the fruits of that Euro USD trade one way or another, and we're probably going to see them in the next couple hours. So think about it like that. I'm always going to be a trader. I'm an investor. I'm into some things, but I'm a trader first and foremost. It's not that I want instant gratification, far from it. It's that I want to sit down with a strategy like the opening range breakout, and I want to be able to trade it, and I want to execute, and I want to watch my idea come to fruition, or I want to cut it off if it doesn't look any good. And that's the bottom line, guys. That's what trading is. In any case, if you want to trade, head on over to Switch Markets. We've got a lot of things going on here. A lot of new content's going to be out. We're going to be introducing really a tremendous amount. So be sure that you check out Switch if you like tools and resources. Tons of resources. We're already digging into the bag of new EAs that we're going to be able to offer. Those are going to be online in the coming months. So if you do leave us, come back, check back throughout the trading year. There's going to be a lot there. Also the tools, lot size calculator, economic calendar, currency strength meter. All these things are free for everybody to use. feel free to dig in. Check out some of those things. They're very, very strong in what they can do to your trading. I get asked the questions, what's my proper lot size? What's my risk? What should I do? Where should my profit target be? Where should my stop loss be? You can figure it out with all those tools. It's all right there for you. We'll be going through that as the trading year progresses as well. So, all right, guys, with enough ado, that's plenty of build up here. Let's get right to the orb strategy. Now, this comes from a video that we had over in our How to Trade YouTube channel. So if you have any questions, be sure to head on over, check out the original video, and it'll give you an opportunity to get some insights into this. I got some more messages here. Universal, hey, buddy, how you doing? Universal gold medal. Absolutely right. Gold's a fantastic trade, right up around 46.19. We're going to be trading gold here very soon. We'll cover that tomorrow. Let me see. Steven, Euro USD has been finicky at that 1.16 textbook consolidation. Steven, around a big round number. Remember, the Fibonacci that we're watching in the Euro USD for today's session is going to be about that 116.10, 116.12 level. If we get a daily close above that, I think we're going to be in pretty good shape. But it's up to you. You can cut the trade off right now, walk away at break even, call it good. For me, I'm going to let it ride. We had a couple pretty nice scores last week. 25 pip risk. Not worried about it at all. But I do believe it's going to come in. Got a lot of confidence. Let's see. Tina, wow, silver's amazing, isn't it? Steven, love the stories about Montana. It's like watching Yellowstone. Without the horses. We used to make ads and film all sorts of content with my horses, my dad's horses, actually, out on his, it's not a ranch, but it's definitely out on his land and his place. But we lost both of the horses in the last, 18 months. So now he's housing the neighbor's mules. Neighbor's got a pack string of mules he uses to go in the back country, do hunting trips and things with people. So dad's feeding the mules. Mules are, man, you ought to see the strength. These things are big and strong. They're pack mules. Nothing stronger than a pack mule. I love them, too, because they're ornery. They'll get in your face. They don't put up with any BS. All right, guys, opening range breakout trading strategy. Now, this is one that I really like. This video is over on the How to Trade YouTube channel. You want to go head over there. Check it out. It's about, 10 minutes long, 8 minutes long. It's very fast. I show you trading examples. I'm going to run through the progression right now and sort of give you the tutorial, the quick and dirty, on how to trade this. All right, so essentially what we're looking to do is target the opening of the markets. Now, the reason why it's called the opening range breakout is because we are trying to find a range that's established right after a market's, basically it's open. And now the reason why we would do that is because there's a lot of action in the market. There's a lot of volatility. There's a lot of participation. So when we sit around and we say, Shane, when should I be trading? I said, well, it depends on what kind of trader you are. I have some strategies that are designed for right at the open, sort of like this orb. And then others we want to trade later in the day after the market's really settled down and a lot of participation's left. So it depends on what you want to do. This is a breakout strategy. We are looking for a range to be established, and then we're looking to get in on a trend day early. That's basically what we're looking to accomplish here with the opening range breakout. So ignore the last on that list, that New York close. That was from a different type of a strategy here. There's some things you can do closing range breakouts. We're not going to do that because it's high risk, and honestly, you have to have a range developed, a tight range developed by about an hour ahead of your daily close. So I sort of decided to leave the closing range breakouts out of this. Maybe we'll have something like that later in the year. But in any case, we're looking at the Tokyo Open, the London Open, and the New York Open. Now, each one of those opens is going to bring a flood of participation in. By far, the most active is going to be the New York Open. That's when participation comes into the American markets. That's when you start getting the big moves. To be honest with you, that is where the money is. Now, the London Open can be very good. Great Britain pound. Okay, if you're trading the pound, if you're trading the FTSE 100, something like that, maybe individual British stocks, that could be a great time to execute this type of strategy. The Tokyo Open, maybe if you're looking potentially at gold. Don't tell anybody, but gold typically has a little bit of action on that Tokyo Open. Also, you've got the yen. The yen's in play. The Nikkei's in play. So there's a lot going on there that you could potentially trade. Today, we're going to focus on U.S. equities, and then we're going to get into the Forex trading hours, which are pretty good guidelines and get you sort of pointed in the right direction. This is the two-candle orb. Now, there's many types of orbs. There's many orbs that are based on volume. There's many orbs that are based on key levels. There's many orbs that you can just say, okay, well, this is an opening range. This is an opening range. I see a lot of them. We've used Fibonacci extensions in about the past week for the first time really in years on these live streams. The Fibonacci extensions sometimes are viewed as being an orb. I don't want to get into any of that. For me, the best one that I've found is the two-candle orb. It's the two-candle orb setup. What is that? It's the first two candles after the open. We can apply it on any time frame, and we're playing a breakout to a key level. Now, today we're going to focus more on risk versus reward, not necessarily key levels, but I will touch on the concept. Ideal for equities, commodities, and maybe applied to Forex pairs. We're going to focus on equities today, and I'm going to show you a little bit about how to do this on the Forex as well. So, essentially, what we're looking to do is we're looking to do the first two candles after an open. Essentially, that's it. That's it, and that's all. So the process, what are we going to do? We're going to identify our markets. Today, we're looking at the US 30, US 100, US 500, and US 2000. Then we're going to draw our key levels. I'm going to touch on that. We're not necessarily going to focus on that. And then we're going to mark our orb, and then we're going to build our trade. That's simple. Very, very simple. All right, let's get right out to price action here and sort of show you what I'm talking about with regards to, we're not really going to talk much about improving your entries today. You don't really need to do that. If we focus on our process, we're going to have an opportunity to do very well. We just got to have markets that move, and today we have markets that move. All right, let's get to it. So this is a good look at the US 30. This is the US 30 CFD product, and this essentially tracks your Dow Jones Industrial Average or your E-mini Dow Futures. The bottom line is it's hooked on to the Dow 30. Joshua, good to see you, Joshua. So what you have here is a 30-minute chart. Now, the number one question I get asked every single time, what is the best time frame? Is it an hour? Is it 1 minute? Is it 4 hours? What is it? I would approach the U.S. session in one of two ways. I would either be looking at a 15-minute chart or a 30-minute chart. Now, personally, I favor the 30-minute chart because you can really eliminate a lot of risk. You can get out of the chop. Typically, a 30 minutes, that first hour of trade, everything sort of sorted itself out. You have an opportunity to get in the market with a little bit of confidence. Now, for our argument today, let's go ahead and go down to a 15-minute chart. 15-minute chart, US 30. Now, the first observation that should jump off the screen to you is volume. Business has picked up. The volume is there. Okay, now when the volume's there, that's when we want to trade. That's why we're isolating our open. So right there, that's going to be your opening candle, opening 15-minute candle. So let's go ahead and draw our range. Let's go ahead and draw it right from the top of that candle to the bottom of that candle. That is the first two-bar opening range right there. Boom, boom. That's your range. Now, I like to extend it across the chart because that way I always know where that range is. So we're trading above the range, are we trading below the range? What are we doing? So that right there, we've established our range. So just a quick brief review. There's bar number 1. There's bar number 2. We are drawing our range from the high to the low of those two bars. It's a 2-bar orb, opening range. That's our range. All right, so we've got our range established. Now what do we want to do? We want to build a trade. How are we going to get into the markets? We've got to figure out where our elected bar is, where our trigger bar is. It's not tricky. It's the first bar that closes outside of that range. So what is that? There it is. Now, a couple of guidelines you want for your range right there. This is it. Why is that it? Because the bar close is outside of that range. Now, for me, that's going to be clear enough. That's a clear close outside of your range. You are above this top. You are above the high of that range. You got the close. That's your long trade. Now, here's where it gets fun. And here's really the art form of the orb. How do I want to manage my risk? How do I want to manage my reward? Now, the key level concept is going to sort of guide potentially your take profit. But your stop loss is never really going to change. You have two options for your stop loss. Let's go ahead and build this long position. That's going to be our buy. You're buying right on that bar close. Bar closes outside, above your range, you're buying the market. So where can your stop loss be? Two options. Stop loss, and the one I like the best, especially on smaller time frames, is beneath the orb, beneath that orb range. Now, you don't want to put it exactly 1 pip right there. You want to give it a little bit of room, maybe a few pips. I like 5. But if your risk is big, maybe you cut that down to 3. But you do not put it right on the bottom of your orb, and you don't put it 1 pip below your orb. You pad it. You give it a little bit of room to work. So if you get your stop hunted down there by a pip, like many people do, and then the market reverses, you're still alive and kicking. You want the market to prove itself below the orb before you get knocked out. I can't stress that enough. That is absolutely key. So that's the first option you have. The second option is you could bring this right up to the bottom of your trigger bar. which would be right in there. That's a very tight way to play. I call that tight because you're limiting your risk. You're cutting your risk way down. And in that respect, well, that's the wrong bar. Excuse me. I take that back. Sometimes you get sort of ahead of myself, and I did that there. My apologies. There's your trigger bar. Okay, so if your entry is right up here where it needs to be, right on that close, your stop loss could be potentially right beneath your entry bar. See right there, boom. You're going to bring your stop right up there. That's an incredibly tight scalp. Very, very tight, very tight. Would it have worked in this situation? Yeah. Now, as far as our profit targets go, you have a couple of ways to go. Number one, you could go with just a flat risk versus reward of 1. That's a 1, just hit over 50% and you're going to win long term. Not a bad one. Conservative, though. How about a 1 to 2? You could do it that way where you're just using static risk versus rewards. You can also back up and look at market structure. I know a lot of you are smart money concept traders. This right here would represent the 13th of January's high. So this essentially would be your weekly high. I would qualify that as a key level, something like that. You could be shooting for that. You'd say, okay, I think we're going to make new weekly highs. I've got a nice hot breakout. We're going for it. Now you can see that is a severely skewed trade. It's a 1 to 4 risk versus reward. That key level, weekly highs, daily highs, things like that. Those are keys. Overnight highs, overnight lows. That can dictate what you're shooting for in these trades. So if you're watching something like this and you're going, oh man, that's a 1 to 4. All we got to do is get up there and challenge weekly highs. We've got our breakout. We've got our setup. We're going for it. I'd say, yeah, that's a viable trade. You can do that. It's a big payoff. I mean, it really is. 4 to 1 risk versus reward ratio right there. 4 to 1. That's pretty healthy. What do you think your winning percentage is going to be keeping your stop really tight beneath your trigger bar, what I call it, the election bar, the trigger bar, and then shooting for 1 to 4s, 1 to 5s? You're going to get stopped out a lot. But when you win, and it looks like this one may win, when you win, you're going to win big. So that's the decision that you have to make as a trader. Personally, this would be the type of trade that I would have built just like this. Right there's your election. Stop loss would have been beneath the range. Profit target would have been maybe up here at 1 to 1, something like that. Maybe 1 to 2. Maybe 1.5 to 1. You have to decide what you want to get accomplished. Now you'll notice that risk versus reward really changes as you take on a bigger risk. So you definitely want to be conscious of that. Essentially, that's how you trade the orb. That's how you buy into an orb. You wait for a trigger. You wait for the bar to close outside of the range, and you either buy to the top side or you sell to the downside. If we would have got a bar closed down here, then we would have sold. Something like that. Eyes hazy. My orb is my favorite strategy. No waiting around. Well, that's one of the beautiful things about this strategy is you're going to get trades each and every day. So that's pretty cool. As far as what we got going here today, pretty good strategy. That's a very profitable trade right off the bat. We'll see exactly where we close. All right, let's go ahead and see if there's any questions at all. I'm more than happy to answer them. If you've got any, I'm more than happy to do so. Let's take a look at these markets. US 100. All right, what happened in the US 100 today? We're using a 15-minute duration. This is a great illustration of how you can expand your time frame and maybe avoid some chop. Okay, right there is going to be your open. Remember, the tell on the open is always going to be volume. The volume picks up, business picks up. Typically, there's a big spike of volume right on that 7:30 candle, 9:30 Eastern, 7:30 a.m. my time. Check your local listings wherever you may be in the world. This right here is what we're talking about. That's the first bar number 1. That's bar number 2. Now, remember, it doesn't really matter how these bars set up. I like them compressed. That means that there's more range we can still make and puts us into really a hot trade, maybe lower risk. I like it when they're very, very tight. As far as when they get elongated, it gets a little bit more difficult because your risks increase. Some orbs you just don't execute. You say, that orb's not really for me. So what do you have here? Bar 1, bar 2. There's the range. You don't have a trade yet. You go, Shane, what about this one? Nope. Remember, it needs to be clear. It needs to be clear where the break is. So right here, you have a very tight trading range in the NASDAQ. You're inside of the New York range. A lot of folks are going to say, is this a sell order down here? No, it's not. That's a wick. Got a little wicky down there. That's your lower shadow. If we would have closed down here, then yeah, we would have sold it. We would have just taken the position and given it a go. This right here, though, not really that great. Why? Sold off, washed out all the retail longs, rotated right back up into the range. I mean, we haven't introduced the ORB rotational strategy, but when you start talking rotation, late in the day, midday, I mean, that's pretty good stuff. Buying, I mean, that's clearly where the bidding is. The bidders are stepping in at the New York low, and they'll maybe look to sell at the New York high. I don't know that for sure. Back to the concept of key levels. I want to circle back around. So by looking at this 15-minute chart, and a lot of you are ICT traders, a lot of you are smart money concept folks. That's great. We both know, or we all know, that the liquidity sweeps are essentially these candles here, big tails, things like that. You could say that maybe that you got a key level up here somewhere that came across the board on the 13th of January, which is about 2 days ago, 25,881. That's sort of your weekly high. You could say, okay, that could potentially be a long side trade for us here. What's more attractive to me would have been this right here. That would have been your overnight low, would have occurred at about 3 a.m. Eastern, about 1 a.m. my time, which would have put you in the game for what? Would have put you in the game for the London Open. That's fantastic. So right there, you got your sort of your low somewhere right in here. There's your London Open right there. Price rallies on the London Open. Great. I mean, but as far as a target goes, your sell could have been really lucrative. Would it have been unreasonable to sell maybe somewhere in here, put your stop right in there, and maybe shoot for that overnight low, somewhere maybe right in there? It's a great trade. If you wanted to go shoot for your daily lows, things that were established yesterday afternoon, my time, maybe down in there, maybe shooting for this order block, you can see that the risk versus reward's really in your favor. So if this sell would have developed, yeah, you had pretty good trades, right? Not too bad. What if we say, okay, this is really choppy. I want to avoid this. 30-minute chart. What do you have on the 30? Bar 1, bar 2. So essentially, you're going to expand your range just a little bit. And you'll notice the picture gets much, much clearer since we got rid of those 15-minute bars. For me, I mean, the market right now looks to be potentially a bid on the top side, maybe a late day rally up to the top of this this weekly's high. But the sell is really where the money was. It just didn't develop for us. Something to think about there on these U.S. equities. I'm going to run through the U.S. 500 and U.S. 2000, and we do have a trade about the Forex. So I'm going to go ahead and show you how to break down some Forex trades as well. Very important that you don't ignore the Forex because this can be applied to that market as well. Let me see. Eyes hazy. I use it on the U.S. 30 New York Open. That's not a bad way to do it. Not a bad way to do it. What time frame are you using, Eyes? Just curious. Stephen Market. So for FX, you only have one chance at a weekly orb Sunday through Monday. Yep, you've got a guaranteed trade set up every Sunday, essentially, or Monday, depends on where you're at in the world. But essentially, yes, you're going to have one guaranteed setup. Now, there are going to be more setups every day according to where you're trading, where you want to trade, essentially, what session you're trading. So yeah, Eyes. How come the indices have a tight slippage compared to Forex pairs? The indices have tight slippage because there's probably, I won't say more volume, but if you're trading the indices right now, I mean, the spread on that US 100 is only 1.8, which is, I mean, that's really tight for a CFD. That means there's a lot of activity. Those markets are pretty deep. They're not as deep as the Forex, but the price action this time of day is going to be more consistent, and that's going to give you much tighter slippage. Whereas Forex, let's say we start trading, Great Britain pound USD in like the next couple of hours, the market's really going to dry up. And there's not going to be many takers in there, and those spreads are going to get a little bit bigger and a little bit chaotic as we roll into the U.S. session afternoon. Definitely. I used it on a 5-minute chart. Okay, so let's say we want to go to a 5-minute. This US 30 is an interesting example. Let's go ahead. Let's mop all these off of here. So the way that Eyes approaches this, and I like it, I mean, you take these strategies and you make them your own. Now, I'm not saying that you can't do it on the 5-minute. I mean, if you want to do it on the 5-minute, go ahead. Right here, opening, boom, right there. There's bar 1, there's bar 2. So you're in business right there. Bar 1, bar 2. This is fantastic. This right here is a great example. If you traded this one, you made a lot of money. 5-minute chart. Boom. Boom. There's your range. This is good stuff. This really is good stuff because what you have is bar 1, bar 2. There's your range. Compression. 5 minutes of compression, 10 minutes, 15 minutes, 20 minutes, 25, and then finally you break. And then when you break, I mean, you are long. It's on. Your risk is smaller. There would be probably your stop target. A prudent stop target would be beneath the range. But boy, even if you wanted to play real tight and make this a true scalping system, there it is. There's your entry, there's your break, and then it just depends on what you want to take out of this. If I was approaching this on a 5-minute chart, would I be as focused on key levels, overnight highs and lows as being my target, previous days highs and lows, previous weeks highs and lows? No, I wouldn't. I would be in there saying, okay, if I'm scalping this 1 to 1s, 1 to 2s, 1 to 3s, I would just take a straight profit target ratio. Absolutely. It's good stuff right there. I mean, that's absolutely fantastic. All right, US 100, we sort of already covered this. Very, very tight trading inside of a phone booth. Probably not going to take the trade today if you even get one, if you're fortunate enough even to get a breakout. Do you want to take this down to a 5-minute? You could if you wanted. 15-minute, that'll work too. US 500, this is another a product that you can hit during that US session. Let's get off this 30-minute chart. Let's take this right down. Let's take a look at IS's 5 minutes. I mean, the 5-minute, it's interesting. It really is an interesting idea to take it to that granularity. And then what do we have right here? Remember, if you ever have any problems figuring out when the open is, you just look at the volumes. I mean, there they are. Goes from nothing to something. And these are tick volumes. These aren't even standard volumes like we see in futures markets. So something like this, I mean, right there, there's your open. So boom, there's bar 1, there's bar 2. Let's draw a range. Okay, there's the range. What happened? Got banged out. We got banged out of this one. So here's your entry right there. There's the sell. Went positive for us a little bit, and then it came back, rallied against us, stopped us out right there. We got hit right there. So that would have been your stop right there. The beauty of it is it didn't cost you a whole heck of a lot of money. I mean, realistically, your stop probably is right up here at 72. What it cost you, 12 points? No, 9 points. So it was very tight. Very, very tight. But the reversal, yeah, that didn't treat you very well. It was a very, very tough one to take. As far as what you could have done on other time frames, remember, the smaller the time frame, the odds are much, much better you're going to encounter chop. And chop is really difficult. Chop knocks you out of trades before they get profitable. So let's take a look at the US 500 on a 15-minute chart. What did we have here? Should be able to automatically start to see those orbs set up. Right there, bar 1, bar 2. So let's bring this down just like that. 1, 2. We got to extend that range. There's your orb. 15-minute chart, you didn't get gobbled up. So right there, there's bar 1, bar 2. We can go ahead and just move this over. 1, 2. What do you got? Nothing, nothing, nothing. There's your break. So by going to the 15-minute chart here, you eliminated the noise of the 5 and you saved your money. Now, the question of all questions is this. And this is something to chew on when you go home and you think about, do I like the orb? Don't I like the orb? Okay, this kept us out of a losing trade. So immediately we're all saying, okay, let's get rid of the 5-minute chart. Let's go to the 15 and avoid losing. We're always going to win. You're not always going to win. This trade right here on the 5-minute US 30, big winners like this may cover a lot of losers on this one. So it's all up to you and how you want to play it. It really is. For me, a conventional orb trade here, there's your long. You suffered a big pullback. You could have hit the 50% rule. We'll have to cover that a different time. Essentially what the 50% rule is you wait for a retracement after your entry. So bang, right there, you want to get long, and then you wait for that 50% retracement, improve your entry, and then hit that thing to the top side. There's nothing wrong with that. That's not a bad way to trade at all. No, there's nothing wrong with it. It's not bad. Hit that one perfect, right? Something to think about there. There's all different ways to trade. This last one's going to be the US 2000. The US 2000 is called the Russell 2000 Index, and what this is you're looking at more small cap and really explosive high yield growth stocks, more so than the US 100. So these are small caps. Think small caps when you think of the US 2000. So for me, initially, 15-minute chart here. What do we want to do? Right there, there's bar 1, there's bar 2, and absolutely just a beautiful orb. I mean, when we talk about, Shane, show me a winner, that's a winner. That's a winner. No question about it. Long position, boom, right there. You're going to look at your profit targets. You're going to look at your stop loss right here, something like that. I mean, if you were shooting for just 1-to-1, you've already made your money. 1.5-to-1's a winner. If you want 2-to-1, something like that, you're still in the game. What you could also do is just go back to basics. Key levels, where are they? Well, you'll notice what? Key levels here are a little bit different. You're pushing weekly highs, which means you're getting into sort of, I don't know, uncharted territory, maybe something like that. But you could see that you're definitely looking to move much, much higher on a week that has been very, very solid for the US 2000. So you're in a trending market. Could we say that we wanted to take a breakout to the long to follow the trend? Absolutely. Absolutely. It was a brilliant trade, no question about it. How about a 5-minute? Did it work on the 5-minute? Right there, volume spike. Initially, bells should go off in your head saying that's exactly where we're going to start. Right there, right there. Did it work? Bar 1, bar 2. There was your break. It was brilliant. It was a brilliant trade. So there's a lot of meat on the bone here with this orb, and there's a lot of ways to trade it. Personally, I favor the 30-minute chart, but I can see I can see how attractive this 5-minute chart really is, because the idea here is, okay, we've got a ton of action, right? Well, I want to build a trade. Okay, so let's build a trade then. Right there, there's going to be your entry. Take a look if you just bring that stop loss up beneath the trigger bar right here, your election bar. Take a look at, you start manipulating your risk versus rewards. I mean, if you're going to be like a 1-to-4 or a 1-to-5 trader, that's probably the way to do it. That's feasible. You can achieve that. You don't even need the market really to blow that high. So I understand why that's attractive. I really do. That's not lost on me. I like to win. I like to win a lot. And so when I look at something like this, I say, okay, what if I did this? What if I brought this down somewhere in here, which is something more my style? Could we make this go? Well, I know for a fact, 5-minute chart, odds are I'm going to have a US 30 trade, a US 100 trade, a US 500, and a US 2000 trade every single day. So I know I'm going to have 4 trade setups every morning, every day. Something to think about there if you're interested in U.S. equities. All right, I do want to take a bit of time and cover the Forex approach to this. I know a lot of you are Forex traders. You don't trade CFDs or the indices. Believe me, the Forex, the orb is pretty good on the Forex as well. A couple of ways that we could trade this. Now, remember, we're going to be looking at the 2-bar setup. This is much easier now that you understand the concept of the orb. 2-bar setup. We've got a couple of options. We're going to start with the electronic weekly open, and then we're going to look at each session, potentially. Now, the time frames that I would focus on if I was trading the Forex using an orb, the challenge between the Forex and the equities that we just looked at is those equities on the U.S. Open move. They move. You're going to have a range that you can sink your teeth into, and I think that's absolutely fantastic. That gives us an opportunity to trade those each and every day with relative confidence. Now, Forex is a little bit different. A 5-minute chart on a Forex pair, sometimes you only get it to move a pip, 2 pips, 3 pips. It's not good enough. You need a bigger range. You need a range that you can at least work with. So for me, when we do the opening weeks, we're going to focus on the 4-hour chart. All right? That essentially is going to be a swing trading strategy. Now, when we get into the different time frames with regards to a local open, like a Japanese yen off the Tokyo Open, like a London Open, Great Britain Pound London Open, or like maybe the problem with trading the U.S. Open with Forex is it's going to be a little bit of a challenge because the trading on the Forex really begins quite a bit earlier. We'll look at some volume numbers and show you what I mean. But the news events at 6:30, I probably would focus on the Tokyo and the London Open there, and probably trade it. I mean, if you want to trade an orb based on the London-New York overlap, you probably are going to want to start that much, much earlier in the day, potentially. You could set up an overnight range, 4-hour chart starting at the London, but that's not as clear-cut as the equities. All right, let's go ahead and get to it. So the most basic type of setup here on the orb, as far as your Forex pairs go, is going to be on that weekly open. Now you can see right here, this is a 4-hour chart, and you'll notice that sort of there was your 4 hours on, say, a Friday, and then there's your Friday, and then right there is going to be your open on a Sunday. So this, or Monday, wherever you may be in the world. When the Forex market opens in your neck of the woods, you're looking at those first 2 bars, and there they are. Euro USD right here. So what do we have? We have bar number 1. We have bar number 2. All right. You'll notice that the volumes aren't that great. Now, it's not really like the equities trading. This is different. Now, the reason why it's different is because we can't really bet that the volumes are going to be heavy. We can't really bet it. We don't know that. But what that opening 8 hours gives us, it gives us an idea of how to a trading range moving forward. That's the bottom line. So if you're going to make a trade like this, you've got a low there, you got a top side, and then you've got a break, right? So where's going to be your entry? It's going to be right there. That's your entry. Right there, breakout. You're looking to bid this. This would have been a losing trade. Why? Your stop loss is going to be right down here beneath the range. Now take a good look at what we have here. We have an entry point roughly right around 116.81, and our stop loss is down here, around 116.18. So you're looking, I mean, it's not the trade of the century. It really isn't. You're looking at something that potentially is what is it, 63 pips? So the idea here would be, okay, back to your risk management. What am I going to risk on any given orb? 1 to 3% of your trading account. Okay, so if I didn't really like this setup, or if I said, well, I don't really want to be long, maybe the news events, would this be a week that you would want to take an orb trade? Iran tensions on Monday. CPI on Tuesday, PPI on Wednesday, retail sales on Wednesday, jobless numbers today. Do you really want to be in that market? Probably not. So you're going to want to look at your news events if you're going to take a position trade for a few days. But that's exactly what this trade would have warranted. So if you're going to take these types of trades, you really do need to understand key levels. Where can this market go? Somewhere right up here, the 5th of January. What was that going to be? Probably the monthly high, something like that? Well, this right here would have been your monthly high. 1st of January, that would have also been your yearly high at this point, 1765. Could you have been shooting for new yearly highs? Could have. Would have skewed it a little bit in your favor. What else can you do on a 4-hour chart that maybe you can't do as successfully on a 1-minute or a 5-minute? This is an area where you can really say, okay, Shane, I like this. And I would say, okay, 4-hour chart beneath your trigger bar. Right there, you're not risking very much. I mean, your entry is still about 116.81. Your stop out point is your low of that bar is going to be 116.64. So you're in it for about 17 pips. Tough trade. I mean, realistically, that's very, very tight. That's not a swing trade. That would be like a pure day trade, but you can do that. So the keys to building these orbs with any sort of consistency, this Forex orb, weekly open, first 4-hour chart, first 4-hour candle, second 4-hour candle. That gives you an 8-hour range to work with. That's pretty solid. All right, let's go ahead and see what happened. Maybe let's do this completely differently. Let's pick something that doesn't involve the USD. Let's go Aussie CAD. Let's pull up the Aussie CAD and say, okay, where did this week's trade start? Started right there. Now you'll notice your volumes aren't great. They're not going to be great. That's why we're using a 4-hour chart here. So right here is going to be bar number 1. You're probably going to have to use your calendar to do this. There's one, or excuse me, your scales down here. You need to have your dates up. So right there, there's your 1, there's your 2. What happened? Well, let's draw the orb and find out. Extremely tight trade. Extremely tight trade. Boom, right there. There's your entry. You got faked out again. Right there. Boom. Stop loss is down here. So you lost. Entry point's going to be 93.15. Stop loss is going to be 92.90. It's not the loss of the world. Very, very tight. And you'll find as those ranges get tighter, you probably get chopped up. This right here, not even the 4-hour chart was enough to really keep us from getting chopped up. So you definitely want to be diligent there. If you go any shorter than that on a weekly open, you're more than likely going to run into trouble. Okay, let's give a second example, sort of a quick and dirty example using the Great Britain pound and, say, the 30-minute chart. Now, if I'm going to trade the opens, all right, the local open, I want to trade a currency that is really, dialed into what we're trying to get accomplished. Meaning, if I'm going to trade the London Open with this orb, I'm going to want to trade Great Britain pound, maybe euros, Swiss francs, something like that. The big picture is you want to trade something that's going to move. So do you really want to be trading the Great Britain on the London Open? You want to be trading maybe the South African Rand or something? That might work, really, actually. Or do you want to be trading the Kiwi, New Zealand pairs? Maybe, maybe not. I would definitely be looking at Great Britain pound pairs for this right here. London Open, yeah. Tokyo Open, yeah. Something to think about there. Sydney Open right there. Pointed out Stephen MKT. The Sydney Open. Maybe you're trading the Australian dollar there. Something to think about. Keep those assets local to the trading session you're targeting. Do I want to be trading U.S. dollars against anything but the Aussie on the Australian Open? Probably not. It's going to be very slow and quiet. What we're trying to do with this breakout strategy is avoid chop. Avoid chop at all costs. We have a comment here, and then we'll go ahead and outline this Great Britain pound trade for you. Let me see. The FX orb coincides with the Sydney Open. I don't understand the logic how it can dictate price for Asia and London. Does that mean Asia or London opening orbs are better for country-specific pairs? That's exactly what I'm getting at here, Stephen. What we want to do is we want, for that opening week, you're 100% right. But we also have to say, yeah, but currency traders are coming back to the market after the weekend break. So we're anticipating action, right? We're anticipating action. We just don't really know which direction it's going to go. By waiting and reading that first 8 hours of price action, we're going to have a basis for what we think the market thinks, potentially for the rest of the week. Now, does it work every time? No. Does it put you into some good moves? Yeah. It's a great way to get in on trends if the trend's going to be there. So it's definitely, it's all open for debate. It really is. To me, though, that gives you a pretty good two-candle orb setup. And in 8 hours is pretty good. All right, let's go ahead and build out exactly what you're thinking about. So right here, if I'm trading the pound and I'm going pound USD, all right, or let's just get the US dollar completely out of the equation. Let's go Great Britain pound, Japanese yen. That's a popular one. Okay, 30-minute chart. I recommend a 30-minute chart. If you get too tight with your durations, you're going to run into choppy markets, and this is especially prevalent on the Forex market because why? The Forex does not move like commodities or stocks. It just doesn't. It's I call it a grinder. It's a much slower market. It's a much more of a grind. So right here, you've got an opportunity potentially for your London Open, which is going to be when? About 3 a.m. Eastern, which is going to be right here, about 1 a.m. my time. I'm going to be sleeping, believe me. So if I've got a 30-minute chart, right, we got to spot our two bars. So right there, boom, boom. Those are my bars right there. Got it? Draw our orb. Spike low, spike high. And it is a bit of a challenge, especially if it's not your local time zone. And you have to go say, okay, where does it begin at? Right there, 1, 2. There's your range. So what are you looking at doing here? Very simple. It's a short trade. Right? There's your entry. Where's your stop loss going to be? Even if it's the trigger bar, something like this, probably just put it right up above the range, right? So that right there is going to have your stop loss somewhere around 213, 35, and then your entry point is somewhere right around what, 212.83. So theoretically, you're on the hook for what, about 50 pips, 52 pips, something like that. So you're looking to for a 1-to-1, something like this. Can we find a key level maybe to take a shot at? Well, sort of making right off of what, weekly lows here. Let's pull up a weekly chart. We'll pull up a daily first, and then I'll show you. Okay, the daily, big time sell-off. Let's go to a weekly. Where's last week's low? Would I consider that a key level? It's worth noting. You know, you may say, well, we've got sort of a point of control there 3 weeks in a row. When? Right around, what, 211.25, something like that. That could be a potential profit target. It just depends on what exactly you want to get accomplished with your trade. One of the reasons I favor 1-to-1s is you already made your money, but you could definitely be shooting for 1-to-2s, 1-to-3s, 1-to-4s. Something like this, 1-to-2s, 1-to-2.5. It's up to you. That part of it's going to be up to you. You have to decide what kind of trader you are. That's a pretty good trade, though. I mean, that one's deep into the green. You've already racked a 1-to-1. You're still in the game for a 1-to-2. If you want to hold this thing overnight or maybe even through the weekend, you may have an opportunity to do just that. So 30-minute chart, pretty darn good for Forex pairs, especially after the open. Okay, let's go ahead and go dollar yen. Run through a quick example of your Asia Pacific session here. All right, Tokyo Open is going to be right around 8 p.m. Eastern, which is going to be around 6 p.m. my time. So let's go ahead. You're going to have to translate those numbers into your local time zone. So we're looking for yesterday right around 6. There it is, right there. Should be fairly obvious, right? There's the volume. So they're sort of picked up right there, 6, boom, boom. And like I said, you need to be very specific with this. You need to figure out, no matter where you're at in the world, what times these are on your charts, what times these are with regards to your own current time. So right there, 6, 6:30. What is my orb looking like? There's your orb. Right there. Boom, boom. Where's your bid? Bid's right there. Where you at? Doing pretty well. Stop loss, 2 options. Number one, well, actually just one option because you got 2 options. That trigger bar right there, you could have a stop loss there. You could have a stop loss there. That right there is why I'm not interested in my stop loss being too tight. I would rather dial my time frame in to a smaller one and play the range as opposed to putting my stop loss beneath the trigger bar, because that right there is going to happen eventually. Boom, stopped out, and then you missed out on the big rally. So definitely something to think about there. I mean, 30 minutes, though, pretty good duration. Let's say you wanted to trade this and say, okay, Shane, I want to see exactly what happens during the overnight. Meaning what? Well, okay, 3 to 7. So right here would have been bar 1. That would have encapsulated that open. And then your second bar would have been, let's get rid of the drawings. Your second bar would have been where? So that would be 3 to 7. That's 7 to 11. So right here, boom, boom, those 2. So that would have been a 4-hour chart coming off the Asia Open, riding it into the UK Open, to the London Open and the US Open. Is that viable? You're going to miss a lot of the moves that are generated in the Asian Open. Essentially, you're not even trading the Tokyo Open. You're trading the London and the U.S. Is that worth doing? Maybe. Back testing will give you some ideas of how many moves you're catching with regards to, or compared to how many choppy markets you run into. Very, very important that you understand how it all jives, it all fits together. Essentially, in a nutshell, what am I doing with regards to all the markets that we've looked at, to everything we're looking at? What is the process? I'm identifying a range. First thing in my head is I know what my stop loss is. If I know what my stop loss is, I immediately know how to dial in my risk management. I'm looking at 1 to 3%. If you want to get aggressive, 5 to 7, whatever. Just know that if you lose a couple trades in a row, you're in a deep hole. Point is this: I know immediately where my stop loss goes, which means I can dial my risk management in perfectly with incredible precision. I know how much a trade's going to cost. I know what I need to get out of it, and it's done. And the other thing that the ORB gives you is this: it gives you trades. We've got 4 US 30, US 100, US 500, US 2000. Those can be executed every day. Sometimes you trade inside of that opening range all day and you don't get a trade. Fine, come back tomorrow. But you're going to have a viable trade setup each and every day. On the Forex, you know you're going to have one setup per pair every week, starting on that electronic open. You know that. You also know that you can focus on the Tokyo session. And you can trade the yen pairs, the London session, the pound, the euros. You could even look at the New York Open, the New York-London overlap, and focus on those majors. You could certainly do that. So we show you these. We give you the tutorial. I show you how to do it. And it's just all about what you want to do with the strategy. It's up to you. It's about your creativity. The trader, what I was taught back in the day was a trader's number one asset is their creativity. 100% is their creativity. I don't want to hamper anybody's creativity. If you see that orb and you say, Shane, I'm going to go with the 4-hour 2-bar orb on the electronic open, and I'm going to trade against the orb. I'm going to bet these things lose every time. Go for it. Do it. Build it. If you build it, they will come. If you build it, the money will come. It's just all about what makes sense to you and how you want to approach the market. Like right here, Steven's comment's great. The FX orb coincides with the Sydney Open. I don't understand the logic and how it can dictate price for Asia and London. Does that mean Asia or London opening orbs are better for country-specific pairs? Doesn't mean they're necessarily better. They're just, you use a smaller granularity there in your charts, so your risk is going to be smaller. You're just managing risk in a different fashion. As far as the orb actually dictating price action, that is not what it does. What the orb does is it establishes what has happened, and it gives us a place to get out of the market if this thing reverses against us. That's what it does. Now, as far as taking profits out of it, you guys sort of know my approach to it. I like to win a lot. My profit targets are going to be conservative. I like to trade and execute trades and win. Typically, I find that 1-to-1 works great for me. Get above 50%, that's your edge. Win 6 out of 10 trades on these orbs, you've got a 10% edge. On every dollar you risk, you have a 10-cent margin, 10-cent profits. That's not bad. Then it's just a game of betting, trading as many dollars as you possibly can. Definitely want to check that out. All right, everybody, if there's no more questions, I'm going to go ahead and sign off. This has sort of been an hour-long session. If you have any other questions at all, or if you want to talk about the orb mechanics, be sure to head on over to How to Trade, sign up for a free account. You can private message me. I will get back to you in short order. And remember, if you need to trade anything or you need some market access, head on over to Switch Markets. They'll get you up and running with the New Year's bonus. I believe it's 5,000 matching, something of that nature. Tight spreads, zero commission accounts. They got a lot of offers right now, and the value-added end of it's what we're really working towards into 2026. It's the ability to solve problems for traders and to give them as much value and help them on their journey as much as we possibly can. All right, everybody, I want to thank you for joining. Absolutely. You have a great trading session, Tina. You have a great trading session, Steven. Good to see everybody over in the How to Trade community as well. Good to see Alita. You guys have a fantastic trading session. Trade the action well, and we'll talk soon. See ya.